Hello, this is Japanese Economic Review Channel. Today I will walk you through a profound structural shift in the Japanese economy. We are witnessing an unprecedented economic paradox. While household incomes have reached historic highs, actual consumer spending is sharply contracting. Today we will decode this divergence, analyze the behavioral shifts of Japanese consumers, and discuss what this means for corporate strategies and policy. Let's examine the data. Let's look at the baseline figures for June 2026. For workers' households, real income grew by 2.0% year-on-year, marking the sixth consecutive month of growth. However, real consumption for two or more person households fell by 3.3%, marking the seventh consecutive month of decline. To make matters worse, the average propensity to consume plummeted to 59.9%. Consumers have the cash, but they choose to withhold spending. This slide illustrates the historical divergence between earning potential and market spending. The gap is widening at an accelerating pace. This suggests a profound psychological shift. The wage hikes won through intense labor negotiations are not flowing back into the retail economy. Instead, they are being entirely absorbed by household saving mechanisms. Traditional economic stimulus via wage growth is hitting a behavioral wall. Where is this high income coming from? In June 2026, the average monthly income for workers' households reached 1,013,986 yen. While regular income for household heads grew by only 0.4% in real terms, the real drivers of liquidity are bonuses, which grew by 2.8%, and spouses' income, which surged by 3.8%. This reflects a tight labor market where dual-income households are actively maximizing their earning power. Are rising taxes eating away at household budgets? The data says no. Non-consumption expenditures, such as taxes and social insurance, stood at 203,341 yen. This leaves a highly robust disposable income of 810,644 yen, which actually grew by 2.5% in real terms. The lack of spending is purely behavioral, not structural. The Japanese consumer physically possesses the cash, yet actively chooses austerity. An intriguing insight from this survey is who is cutting back. Paradoxically, the contraction is driven by the active working population. Workers' households saw a real income increase of 2.0%. But slashed real consumption by 5.8%. In contrast, retiree households maintained more stable spending, with consumption down by only 2.1%. The segment receiving wage hikes and bonuses is the one aggressively hoarding cash. This consumer pessimism is reflected in key indicators. The average propensity to consume dropped to 59.9%. For every 100 yen of disposable income earned, only 60 yen is spent. Meanwhile, the Engel coefficient remains high at 29.1% in real terms. Because a large portion of expenditure is trapped in basic food sustenance, consumers have limited bandwidth for discretionary retail spending. Let's look at the post-pandemic correction dividing the consumer market. While some areas show growth, others face severe contraction. Traditional discretionary goods are experiencing double-digit declines. On the other hand, non-negotiable services and education are seeing anomalous growth. Japanese households are ruthlessly prioritizing long-term investments over immediate gratification. We see a ruthless deferment of discretionary goods. Clothing and footwear plummeted by 19.9%, indicating a near-complete freeze on seasonal wardrobe upgrades. Similarly, furniture and household utensils dropped by 11.4% as consumers delayed replacement cycles. Even utilities fell by 7.1%, showing aggressive, daily behavioral conservation of energy following historic price shocks. However, Japanese households are not freezing all spending. Instead, they are prioritizing future value. Education spending surged by an astonishing 20.6% in real terms, with tuition up 24.4% and tutoring up 15.6%. Additionally, housing expenditures rose by 3.6%, driven by a 13.4% increase in equipment repairs. Cash is being diverted to protect existing assets and invest in human capital. To synthesize these behaviors, we map them into a consumer priority matrix. Essentials like food and utilities undergo aggressive daily optimization. Discretionary physical goods like apparel and furniture have entered a, quote, retail dead zone due to total deferment. Meanwhile, services like healthcare are protected, and education stands as the golden exception, reclassified as a critical investment. This household defensive behavior perfectly translates to the macro level. The Total Consumption Trend Index, or CTI, which tracks consumption across the entire economy, stood at 106.3 in real terms, representing a minor month-on-month decline of 0.1%. This flatline confirms that the stagnant spending environment is persistent and uniform, successfully resisting monetary and wage-based stimulus. In conclusion, we see the emergence of the fortress household. First, rising liquidity is trapped. Wage hikes are being banked, not spent. Second, retail triage is occurring. Delayable physical goods are sacrificed to fund education and asset protection. For strategists and policymakers, wage hikes alone cannot break this psychological barrier. To unlock this capital, we must address long-term consumer safety. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.